there, I'm Margie Remmers-Davis, founder and CEO of Acadian Accounting Education, and this is a clip from one of our free Class Friday sessions. Stick around to the end and I'll share with you how you can join us live, absolutely free, every week. Now let's jump in. So this is what we're going to do today so if you log in, here's our one for today. We're going to practice transfers if the sample company works. If it doesn't work, it's okay. We're still going to go over debits and credits. Okay, so click here to practice transfers. If you do not have a subscription to the gym, or if you have but you don't have 250 points yet, Joel is going to put it in the chat so that you guys have the link. Okay, all right. Jenna says QBO Gym is also fantastic for finding knowledge gaps for those of us who initially learned bookkeeping on the job and are now starting our own business. Yes, great. Yes, that's true. All right. So, so we're going to start by loading the sample company. Now this, by the way, this is a very simple exercise that we're going to be doing today. I picked it specifically because we're having so many problems with the sample company. I wanted there to be the least number of clicks possible so that we don't get booted out of QBO. So we're cross our fingers that this is going to work. Okay. So the exercise itself comes from our course called Bookkeeping Fast Track. And this is in the plus section, okay? So Bookkeeping Fast Track is our foundational course. That's where we recommend everybody start because it's actually going to give you the foundational knowledge that you need to actually practice being a bookkeeper. So not only are you going to learn like what a bookkeeper does, but you actually do it hands-on. Everything, as I mentioned earlier, everything in Acadian is about doing things hands-on. So as you learn the bookkeeping, you're actually going to be doing the bookkeeping as you go through Fast Track, okay? So Fast Track is separated into two sections. There's Foundations, which is the base level knowledge, and then we have something extra called Fast Track Plus. And one of the things that is in Fast Track Plus is these special situations. These are the things that we don't cover in Foundations because they are, because they're not like things that happen all the time. They're not like part of your foundational knowledge. They're just things that you might run into. Okay, so transfers is one of those things. It's in the session. Okay. So Stephanie says she did several fast track exercises this morning and everything worked beautifully. So we'll just see how it goes. Again, I specifically picked one that did not have a lot of clicks. So we'll see. Okay. So when would you use a transfer? Why are we even doing this? Okay. So a transfer is when you move money from one account to another account. Like a bank, I should specify it's a bank account, okay? Or it could be petty cash, so not necessarily bank, but we're not talking about, you should not use this in replace of journal entries. So there are times when you have to use a journal entry to move money from one account to another, okay? That's not what this is. This is specifically for moving money. So in the case, for example, of moving a checking account to a savings account, okay? If you're in Fast Track and you've gotten to Module 10, we talk about having a conversation. Module 10 is all about having a conversation with the business owner so that they understand their numbers, they understand what they're looking at, okay? And one of the things we teach you to talk to them about, one of the things they should be talking about is having a plan for their profit, okay? Because what happens is they get their profit, so money comes in, then there's the cost of what it was to deliver that. Okay, so if they're selling, you know, t-shirts or whatever, then there's a cost. They have to buy the t-shirts in the first place, or if they're making the t-shirts, they have to buy the fabric, you know, and they have to pay the people that make them, right? So, so all of that is the cost of goods sold. So we take the money that came in, subtract the cost of goods sold, then you have your gross profit. And then out of the gross profit, you have to pay for the things to run the business. Those are called operating expenses. So you have to pay for, you know, the building. You have to pay for the, you know, salary of the executives. You know, you have to pay for, like, you know, office paper, whatever. All those things, those are operating expenses. You subtract the operating expenses, and then you come up with your net profit. And that profit, okay, the goal of the business, the goal of any business is to maximize that profit. And what happens is the business owner sees, oh, I've got all this profit. Woohoo, yay, party. I can have, like, I can just take all this money. But they can't, because part of that money, for example, has to be reserved for taxes. So this is a perfect use case of transfers. Is you have your plan for profit, and then the profit comes in, and then you regularly put that money away for taxes, for example. Okay. All right. So Craig moved $100 from the checking account to the savings account. We're going to record the transfer. We're going to load the sample company and cross our fingers. I'm not a robot. It actually doesn't happen. It only happens after you click around for a while. So that's why I picked one with very few clicks. Okay. All right. So I've loaded my sample company. Now we're going to get through to the exercise. The first thing I have to do is click the plus new button. Now, it can be a little bit of a pain to go back and forth between the exercise and the sample company. And so I'm going to teach you a little trick. All of our exercises at Acadian are created with a software called Scribe. And Scribe provides a Google Chrome extension that you can, if you're using Google Chrome, you can click this little jigsaw puzzle and go to, and that will open up your, you click the little jigsaw puzzle, and then you select Manage Extensions, and then it will take you here, okay? And you want to click the Chrome Web Store. It's free, this additional thing, or this extension. It's a free, and then you're looking for this one. It's called Scribe AI Documentation. It looks like this, okay? Once you have that installed, then when you're looking at our exercises and you hover over in the right-hand corner, and actually looks like they just changed it, so you can hover over anything in here, you'll see this little Star Trek badge, okay? And when you click this Star Trek badge, magic happens, and it puts the sample company together with the exercise, so they are side by side, okay? Now, when you first load it, it's in Guide Me mode. So Guide Me says, you know, just tell me step by step, okay? I prefer not to have Guide Me mode. I prefer to scroll through. So I'm going to click this little button that says Guide Me, and I'm going to turn it off. So now I'm scrolling through the exercise, okay? So Joel has put in the chat, he's pretending to be me, but he's put in the chat the link to the exercise, or I'm sorry, not the link to the exercise, that was earlier. He put in the chat a link to instructions on everything I just said about how to load the Google Chrome extension and all of that good stuff, okay? All right, so now here we are, we're gonna do this transfer. We're gonna click the plus new button, and we're going to click transfer, okay, and right here, how was your Guide Me experience? I don't want to vote on that. Okay, so the first thing we're going to do is we're going to select what account we're transferring from. So we're going to select the checking account because the exercise is to move money from the checking account to the savings account, which is important because you want to set money aside for things, you know, emergencies and taxes and all that. Okay. And let me just check what's happening in the chat here. Okay. So once you select where you're transferring the funds from, it's gonna show you the balance. Now, if you've been around for a while, you know that there's a difference between the bank balance and the QuickBooks balance, and they'll never be the same. So this is the QuickBooks balance, not the bank balance. And then it's going to tell you, you're going to have to choose where to transfer the funds to. And so we're transferring it to savings. And so right now there's $800 in there. Okay, so here's the note. Keep in mind the balance that appears is what is currently recorded in QuickBooks. This does not necessarily reflect the current amount in the checking account. That's what I was saying. Okay. All right, let's see. So we did that. Okay, so now we're transferring $100. $100. Okay, so now one thing to remember is that what we're doing here is we are not actually transferring the money. We're recording the transfer of the money. This does not actually connect to your bank to do the transfer. You have to do the transfer in, you know, whatever the bank software. Okay, so just that's always something to remember, especially if you're new. You're not actually affecting the bank account. Okay, so we could put in a memo here about why we're doing that. We're not going to do that. Oh, I guess we're just going to say transfer to savings. Okay. If you wanted to add an attachment, you could, but there's not a whole lot. I mean, one thing that you could, like if you went to the bank and you did the transfer and you got the little piece of paper, you could scan that and, you know, show that that's when you did it. If you did it on your phone, you could just grab a screenshot. That's a thing that you could attach if you want to. That's going a little bit stronger than we probably need to, but anyway, but that's what you could do. Okay, and then we're just going to hit this little green arrow here to hit save and close. All right, so what just happened? Okay, here at Acadian, we don't just want you to know how you did it. We want you to know the under the hood, like what's actually happening. So let's talk about that. Now, Lisa says, will you also address how to accurately categorize transfers that come through the bank feed? Well, I don't know what to say about accurately. I mean, you're not categorizing transfers. One thing that you will hear Hector Garcia say all the time is that you always want to make sure when you create a transfer that it actually is a transfer, because it's difficult to undo. I don't have a lot of personal experience with that, so I don't know precisely what he's talking about there, but you'll hear him rant about it. The other thing is that if both accounts are connected to QBO, they'll call that it'll recognize that there are matching transactions. So that's actually referred to as a paired transaction. We're going to be talking about bank feeds, hopefully, knock on wood, next week. If the QBO is working, that was our plan today. So there is a transfer in there. We'll talk about that next week, hopefully, if I have some wood to knock on, that we can do that. All right, so let's take a look at the, let's talk about debits and credits, and then we'll take a look at what just happened in the ledger. Okay, so let's go to I got to pull up. I forgot to prepare this, so let me just pull it up real quick. My little presentation. Some of you have seen this many times before, but everyone always tells me that they like to hear it over and over. And I like teaching it because so many times I just hear people say, oh my gosh, I never understood it before. What is... All right, I have to do this a different way, I think. Let's see. I should have, Joel, we should add this to our checklist to like always have this ready, because sometimes I just want to refer to it. I'm surprised that I closed it ever. All right, but let's just see. Give me a moment. Okay. All right, let's use this one. And here we go. And play. And drag it over so you guys can see it. All right, so when I was first starting out, let me make that visible so I can see you guys. All right, Leslie says, she says you are not seeing the Star Trek badge. So you have Scribe and it's open, but do you have it in Google Chrome, and have you installed the Google Chrome extension? It's the Google Chrome extension that is, it's the Google Chrome extension that shows you, that allows you to have that little Star Trek badge. All right, so let's talk about debits and credits. Now, when I first started my bookkeeping journey, I did not understand debits and credits. I've never taken an accounting class, guys. I've never taken an accounting class. I did not understand debits and credits. Debits, like things just don't make sense. Like what we're going to talk about is crediting a bank account actually reduces the balance. What? Crediting a bank account reduces the balance? That doesn't make any sense. When I went through when I got my, what used to be called advanced QBO certification, they had a question on there about like how something affected debits and credits, and I don't know, I just got it wrong. Like I had no idea. And I tried to ask my mentor for an explanation, and he didn't, really give me any information. I just thought I needed it to pass that test, because I kept, in real life, I thought the software does everything. Like why, like if the software does everything, why do I need to know debits and credits? And so for the longest time, I did not, sorry, I got distracted by the chat there for a second. For the longest time, I just resisted learning it, because I just thought like it'll always just tell you. And then really what did it for me is we started talking to accountants. We started talking to accountants and to find out, because we want you guys, our goal here at Acadian is to create the best bookkeepers, or bookkeepers who are so good that people don't want to work with anybody else. Okay, so the only way we can do that is to talk to accountants and find out like what would make a bookkeeper that amazing. And what we just heard over and over and over was debits and credits. So then I said, okay, well, I've got to figure this out. I've got to understand it. It's so confusing. I studied all of these things. And then one day I had a light bulb moment and I realized how it actually works. And now I teach it, and we've just had hundreds of people say, oh my gosh, I finally get it now. So you have to know debits and credits. Number one, because the accountants need you to know it. And if you do journal entries, if you are troubleshooting and looking at what happens, you have to know debits and credits. All right. So there was a thing that caught my eye. Okay. Stephanie says, I actually kind of like figuring out debits and credits now. Yes, I feel the same way. Lindsay, is Charlotte Brayford the person that we've been trying to get a hold of? Or is that somebody else? Or am I thinking it might be a Charlene? Okay. Anyway, if it's Charlotte, she's on the call. Oh, it's Charlene. Okay. Never mind, Charlotte. Sorry, I didn't mean to give you a heart attack. All right, so let's get through and talk about debits and credits. We got through the sample company. Either it's fixed or we didn't have enough clicks to cause the issue. So, all right. So in double entry accounting, whenever you record something, you must record an equal amount on the other side. In other words, the entries must balance. And you can think about this like a seesaw, okay? All right, and I'm going to, Leslie says, still giving me issues, so. All right, so hopefully at Intuit they're on it because everyone is just going crazy. Okay, so let's talk about, continue. It's hard for me to see the chat and do this. So let me get through my whole spiel and then I will come back and we will, I'm going to get through my whole spiel. Then we're going to get to, I'll get your questions because it's difficult for me to go back and forth. I'm feeling a little scattered. Okay. So you can think of debits and credits like a seesaw. Okay. And on one side we have the debits and on the other side we have the credits. So if we add something on one side, we have to add something on the other. Now, I didn't have time this morning to change this animation, but but the other thing I wanted to point out to you, excuse me, is another way to balance the seesaw. So you can put stuff on one side and stuff on the other, but another way to balance the seesaw is to put one thing on one side and do what? What could you do to balance the seesaw? I'm going to check the chat because I'm asking you. Okay? So you put one thing on one side of the seesaw, exactly, and take something off. Okay? You could take something off the same side and it would balance, right? So you put it down and then take another thing, take it off. Right. Good job, Chris. Thank you. All right. So that's going to be, so that's going to kind of, well, it's going to kind of be important later. A little bit. All right. So now each type of account, remember there's 5 basic accounts and we're going to kind of talk about a 6th, right? But each type of account lives on one side of the other. And this is referred to as the natural balance. The natural balance is where they live, okay? It's where the accounts naturally live. And you have to memorize this. You have to. There is no choice. You have to memorize this. Just like when you were learning to read, you had to memorize the alphabet. I'm a musician, and so I had to memorize key signatures. You just some things in life you have to memorize. So how can you memorize this? Well, I'm going to teach you a good way to remember it. Okay, so you're going to draw a line down the middle of your seesaw. On the right side, on the side on the right, these are all of the places that money comes from. Okay, and on the left-hand side is where the money goes. In other words, it's the destination. So come from, and destination, debit. Okay, so credit, come from, credit, destination, debit. Okay, so where does money come from in a business? Well, there's 3 places. There's only 3 places. Okay, the first is income. Income is where that's the money that you get from the sale of your products and services. Okay, it's also referred to as revenue. Okay, so we're going to put an R up here. The other place that money comes from is from the owners. So the owners may put in money to get the business started. Okay, so that's where money comes from. It comes from the owners. When the owners contribute money, they call that equity. Okay, so equity is on the right-hand side. And then finally, the last place the money comes from is from places that you're borrowing money, that you have to pay back. So those might be credit cards, they might be bank loans, okay? But those are called liabilities. So on the right-hand side, we have our liabilities, our equity, and our revenue, okay? Then on the left-hand side, we have assets. Remember, this is where money goes, okay? So money goes to an asset, and there's all sorts of types of assets. There's liquid assets, or the ones that are cash, like a bank account where you just have the money, where you can get it all the time. But then you have fixed assets, which are things like machinery and vehicles, the things like where money is like tied up, okay? So, but all of those things are assets. Those are the things that the money things that the business owns, okay? O-W-N-S, owns. Those are assets. Another place that money goes is out to vendors, like for expenses, like you have to pay for stuff, right? We talked about, if you're making t-shirts and you have to buy the t-shirt, right, or buy the fabric, then that's money goes out. That's going to be an expense, okay? And then finally, where's the third place that money goes? The third place is back to the owner, okay? So the owner puts money in, the owner takes money out, and those are called distributions or dividends, okay? So this acronym of dealer can help you remember what did I just do? Yeah, I'm not going to go into that. All right, there's way more, okay? So understanding just like where they start, where they live in the first place, that's the first step, okay? So you have to understand where their natural home is, okay? Once you understand where they naturally live, the next thing you need to understand is how they move, okay? And this is where people get a little confused, okay? So let's go over it. Okay, so on the left-hand side, we have debits, DEA, and on the right-hand side, we have credits, LER. Now, so far, when we have been talking about debits and credits, we've been talking about it as a noun or as an adjective, okay? So this is a debit account. An asset is a debit account, okay? Or you could just say an asset is a debit, okay? So nouns or adjectives. Well, now we're going to start using the terms as a verb, okay? So the moving. So we're going to debit something or we're going to credit something. When you hear accountants, accounting people, say that they're debiting something, that always means it's moving to the left, okay? And crediting always means it's moving to the right. So if you say, I'm going to debit this, I'm going to credit that, that's easy. That's an easy thing for your brain, okay? The hard part is when people use the terms increase and decrease, because then it gets complicated, because then it's dependent on where it naturally lives. because it's going to mean something different for the different types of accounts. Now, the way that you can remember this is we're going to go back to when you were in middle school, think 7th grade-ish, and you learned how to plot numbers on a graph, okay? So when you plotted numbers on a graph, we've all done this, okay? You know how to do this. We have a line down the middle, and we have a line across, and right where they meet, that's 0, okay? On the right-hand side, you have positive numbers, and positive numbers go 1, 2, 3, 4, 5. They increase to the right. When that number increases, it's moving to the right, okay? And when those numbers decrease, they go to the left. 5, 4, 3, 2, 1, right? Easy peasy. When it's positive numbers, we've got it. No big deal. The challenge comes in when we're dealing with negative numbers. Now, I want to be very clear that we are not talking about negative numbers. When we talk about debit accounts, these are not negative numbers. I'm just using this term to help your brain remember like how it works, because it works as if it were a negative number on that side, okay? So negative numbers, when they increase, okay, they go further to the left. -1, -2, -3, right? It moves further to the left. Increasing goes to the left. And when they decrease, they go to the right, okay? So when there's less of that thing, when there's more negative, it goes to the left. When there's less negative, it goes to the right, okay? So let me stop right there and check the chat, make sure that we are good. Okay, let's see. Gretel says, this is an excellent way to memorize this. I love it. Awesome. Margie, since your team is always so on top of things, after your aha moment a week or two ago, I thought for sure the triangle on the seesaw would be the Acadian A. We did talk about that a couple weeks ago. We were like, why is that not an Acadian A in the middle of the triangle? We should totally be doing that. All right, so, okay, I don't see any questions, so it looks like you are with me so far. So now let's talk about our asset account. Okay, so just now we did a transfer. We're tying it back to the exercise that we just did. Okay, we did a transfer. We moved money from the checking account to the savings account. I'm going to stop sharing my screen because I did not prepare a graphic for this. Okay, so we moved money from the checking account to the savings account. What type of account are each of those? What type of account is a checking account and a savings account? I will wait. Asset, right. Both are assets, okay? So both of them are assets. One of them decreased and one of them increased, okay? Which one decreased? We transferred money from the checking. We transferred money from the checking decreased. It's an asset, and when you decrease an asset, where does it go? Credit. Excellent. So what we should see, we're going to look at this in just a second. So what we should see a credit to the checking account for $100. And then we should see for the savings account increased. So what should we see for the savings account? On the left, debit. So we should see $100 on the left for the savings and $100 on the right. So good job, you guys. You guys must have been here before. All right, let's go. I got to share my screen again. Let's go back to the sample company. Get rid of that. We don't need that anymore. All right, I'm going to close the exercise because we're done with exercise. Now I'm going to go, let's see, there's a couple of ways I could find it. Let's go to, I'm going to click here. And here is the transfer that I just did, okay? I'm going to click on that. I'm going to click More, and I'm going to click Transaction Journal. And there we go. We see the checking account was credited $100 and the savings account was debited $100. This class comes from our free Facebook group, the QBO Gym Locker Room. Inside, you'll get access to a free QBO QuickStart course, over 100 hands-on exercises, weekly marketing tips, monthly drawings, and more. The link is below. Join us today. We'd love to see you there.